So, Simon, how much would a microphone like this run me?
I'm not doing anything like that this one.
And is his more expensive because it's gold and mine's silver?
He's been talking to the representative, so he's keeping it very professional now. So
Okay.
you've got to be professional now.
Speaking of professional,
You started this.
Are you
the
ever
whole
gonna
thing
show
is
your
you're the
face?
one that did this.
Are you ever going to show
So
your
if you
face?
actually don't correct that and get your lawyer to back off, we're not going to be able to keep these things going. That's all I'm saying.
How do you two know each other? That's what I want to know.
That's not important. Y tú usaste mi primo.
No, John, don't
¿Es
do
tu
that.
abogado?
We're going to lose clients if you do that.
As a young man, heard the sky's the limit. First thing first, I'ma break through the ceiling. One life jam, but it feels infinite. One life damn, then I better go get it. Start at the
This podcast is being brought to you by the Reyes Group at IA Private Wealth. That is made up of myself, John Reyes, a wealth advisor, and Jillian Seguin, an associate wealth advisor. As you know, I like to represent with a lot of clothing and stuff, so shout out. If you know, you know. We'll just leave it there. You're from Eastern Canada, so you wouldn't get it.
Welcome to a Bearable conversation with John and Jill, IA Private Wealth, Reyes Group, Associate Wealth Advisor.
And wealth advisor,
Now that we have that out of the way, we can relax and have a podcast.
right?
Okay, our listeners today, John,
Podcast, visual.
viewers are tuning in to really learn about
They click. They don't tune in anymore.
the Bank of Canada's interest rates and perhaps how particular events, whether they be monetary, political, global, whatever, affect our investing strategies. Go.
It's a lot of words I'm trying to follow up with. So what we're going to try to explain to people is when inflation gets up and more money's printed, how that gets adjusted or fixed, and how that affects us. Am I getting the gist?
I think everybody understands how inflation occurs.
Okay.
And I think that they understand that based on the past 2 years, the Bank of Canada or wherever, the feds in the US will increase interest rates as a means to slow the economy and bring inflation down.
That's right.
But we've had very persistent inflation that seems to kind of be sticky.
And who's a really big perpetrator to the increased inflation in Canada? Like that keeps just printing money and printing money. Who would that be? Can it fall under governments? Are they the main contributing factor? And can that...
We have to be careful, we're in Alberta.
I know, that's why I'm saying this, because they'll really like it when we kind of start pinning it on some individual.
Like a snowboarder.
Yeah, or a school teacher.
Okay. We're getting sidetracked. I think what I was hoping to come out of this conversation is, as this economic environment sort of unfolded,
Yes.
how did we pivot here with our clients? What did we do internally, and what did we do with our portfolios here to adapt or to benefit from that environment?
That's right. And I think, this is going to be one of these crossovers that we talk about sometimes, in that when advisors work with clients, it is based on we do it for a living, right? So we make money, and we make money from the advice that we give and from the recommendations that we make. There's no hiding from that. We're not here to try to hide that or distort that in any shape, way, or form.
Mm-hmm.
When we think about what's right for the client, especially as our clients age and sometimes are looking at a lower risk profile, is the importance of GICs, as an example. And so GICs is a short form for government investment certificates. Guaranteed investment certificates, sorry.
That's all right.
Again, I'm just trying to figure out this inflation, and maybe that's still rattling in my mind. So guaranteed investment certificates. Now, traditionally speaking, before we entered this higher inflationary environment and the decision to combat this with increasing interest rates, GICs were not paying very high.
Less than 1%.
That's right. And we can make the arguments about whether they should have still been applicable or not, but the reality is that those need to be sold by individuals like us sitting in this chair. And if there is not a large incentive for that to occur, then often what might be in the best interest of the clients isn't necessarily shown to them. And that sounds awful, but again, we can hide from this or we can really talk about it. When we construct portfolios, and our clients can be attest to this, whether interest rates were low or interest rates are where they are, if it was in the best interest of the client to do, we brought that to the table. And that is the area in which our clients benefits from that, because now, not now, but leading through this, interest rates on, or rates that we could get on GICs were what, Joe? Like,
At the highest, like 5.8%.
right? And we lock those up for a year for clients and virtually to no risk. And that is incredible, right? As we now come closer to peak inflation and now on the other side of it, and now interest rates are starting to come down, you can still get high mid-4s in terms of the rates. And we're still soliciting that. I think Jill put it in order not too long ago here, earlier this week, for a client. So again, I'm derailing, but I just want us to demonstrate that when we make decisions, it's not a financially beneficial decision for our team in terms of that, because those dollars are tied up for a year, 2, 3, 4, 5. But it's because it's what makes sense to our clients. So that's how we use tools to help our clients. Mm-hmm. So I'm not sure how we can kind of backpedal back on that, but
well, I think you've touched on it. Sort of, within the markets there was a sort of flow of capital from equities, and particularly clients that were deriving an income from their equities by way of dividend.
Yeah.
If you think about it, the Canadian banks typically pay 4 to 5% yield in a normal environment. Why would you hold a share in a bank at a 4 to 5% yield
with risk,
when you could go to a risk-off asset like a guaranteed investment certificate, provided you don't need the liquidity, and you could get over 5% interest, knowing that both of those incomes are pretty much taxed very similarly. Two, here in Canada, there are sectors that perform better in a high interest rate environment and those that don't. And that also speaks to what I just kind of talked about, that flow of capital. So when interest rates are high, you seem to see a sell-off in financials, real estate,
tech.
Not
to
so
some
much
degree.
tech.
Well, there was a
yeah, some degree. But I would also say definitely utilities.
Yep.
And those are the sectors here in Canada that we really live and die on. Utilities,
I think that's all that makes up our...
And real estate.
Maybe energy too.
Again.
Yeah.
Snowboard teacher. Okay. And then you have now a shift of, or at least now you have an environment where rates are coming down.
Yeah. And
so we are really hoping to see the capital flow back into those areas, or anticipating that the capital will flow back into those areas.
Well, we are. You look at it, right? This week, again, I know that depending on how these podcasts go, but this week, we saw two pretty big, significant events, at least in Canada, with WSP making a fairly strong bid for a competitor into the billions of dollars, and they had to raise close to $1 billion, and that was well oversubscribed. So that's showing some capital market activity that's coming back. And then Tourmaline, which is more localized to Alberta, made a very, I'm going to say, lucrative offer to those shareholders of Crew Energy, where it was a 72% increase, an uptick in value. So, the confidence level of being able to get deals done becomes more prevalent when you are dealing with a more stabilized environment, whether it's inflationary coming down or interest rates also coming down in tandem. So, yeah, I agree.
And I think also 2 weeks ago, we saw a bit of a correction in that technology sector.
Yep.
And those risk assets, what we would call risk assets, tend to perform well when interest rates are high. And I believe it was those investors taking their profits, knowing that rates are coming down, knowing that the risk-off assets that have been kind of smothered for the last 2 years are probably going to catch a bid, and they're going to move in there. Reason why, just on a high level, the reason why we see utilities and banks sort of stagnate during a high interest rate environment is that, as we all know, costs go up. And people who can participate in those increasing costs by increasing their prices will fare okay. But when you look at something like a utility, they operate in a regulated environment, and their pricing has a maximum and minimal.
At least in Canada.
Exactly. A maximum and minimum allowable spread. And so they can't share hugely in that upside.
Yeah.
But their costs go up.
Yeah.
So that's just a little piece of information I thought I would share.
I want to talk about elections, but I want to find a good segue.
So I would say this.
Yep, go ahead.
Here's what I would say, because you listened to me, is that talking about interest rates like we are right now,
Mm-hmm.
and how that may or may not influence our strategies or our portfolio management, it's important that we stress that those individual events, sort of short-term blips in the global economy, don't necessarily impact us to shift our strategies. And I think what's important is that we invest more long-term for our clients' financial goals, or for our clients' benefit.
Yeah.
And we don't react at every little, it's not a little event, but every event.
Yeah.
And the best piece of information that I've ever heard is that if you look at the markets, both Canadian or American or global, but let's talk about North America.
Yep.
In the last 2 decades, we've had a terrorist attack on U.S. soil, the collapse of the financial sector.
Yep.
We've had a global pandemic.
Mm-hmm.
We've had some interesting leadership,
Yep.
to say the least.
Who might be coming back.
Yep. We've had historical inflation. All of those events.
Yep.
And the markets are still higher than where they were in the early 2000s. So if we had reacted, we may have missed out on recovery. We may have missed out on that sort of slow grind upward. And so I just think sometimes corrections, or sometimes these 10% drops in the market, like we saw a couple weeks ago,
And I want to touch on that before we go to the elections.
they need to happen.
That's
You
right.
want them to happen.
That's right.
Because if they don't, the climb's going to be faster, but the fall will be greater.
Yeah.
And I think that's important to remember.
I said here twice now, trying to tie back into getting Jill's views on political environment, and again talking about these one-off situations. I think it's important to note too about this event that we were talking about, right? I think the Dow Jones dropped, I think at one point 1,000 points, and and everybody was like, "How is this happening? Why is this happening? Is this a precursor to a much greater situation?" And the reality was, it was a carry trade. Well, at least that's being what it's calling it, is a carry trade. And for a quick little 411 on what a carry trade, when people are looking at shifting capital between currencies and trying to find the best opportunity, a lot of that was happening when inflation was driven upward. People were looking for moving money between different currencies to try to play that up. And that is where we saw a lot of money flow into an inflationary environment, like what was happening in the United States and what was happening in Canada. Now you shift the narrative, and we're starting to see inflation come off, and we're starting to see that those people that were borrowing at a different currency to then invest in another one to play on that interest, had a very quick reversal. And that's one of the big differences as we start to, move along in the evolution of the financial world, is how quick those things can happen. In previous corrections, they take forever to climax, and then there's this dramatic fall. That was a very quick 3-day, and we were back to this normality, and whoever had to make those trades made them, and now they're making other decisions. There was a time when, the godfather of investing here,
Warren Buffett.
Warren Buffett, when he would make a call like he did about saying, I just sold this massive amount of Apple, it would have been a detrimental doomsday sign to the market. And you know what? All that's telling me is Mr. Buffett's put a lot of money on the sideline for probably something that he wants to buy. And that is a very bullish indication to me that he is still looking at the world and seeing value.
There's still, but outside of Warren Buffett, there's a lot of capital still on the sidelines.
Oh, for sure.
I think last time I looked, there was about $13.7 billion.
Remember, Joe, every time you pull these quotes,
I won't
you're
say
going to have to have a lot.
But it was billions of dollars.
Supporting. I love it when she does, because then she has to
my
research.
Footnotes. There were billions of dollars on the sideline still from COVID days.
Yeah.
And people, because the market has continued to grind higher, have been waiting for that pullback. And
That's a big time to wait.
That is why I think that pullback that we saw was so short-lived.
Yeah.
Because any time we're going to get a pullback before the end of this year, I believe will be backstopped by those dollars starting to come back into the market.
Yeah, that's very fair. So let's shift to the political environment.
Okay,
we're a couple months away from a major event to our partner, to our brothers down south.
I love it.
I know you love it. I'm indifferent. Go talk. Let's see.
I don't have a lot to say. I think.
Okay, we'll focus on the.
So am I gonna?
Do you want to trade around political events? Again, we don't do this as a strategy.
No, I don't. But there are definitely. Okay, so it's clear if you look at sort of what happened in the markets after the infamous, now famous debate. And obviously...
You need to tell because she says that and I smile. Like I know.
Knows.
Nobody knows because I don't.
The Biden-Trump debate.
Okay. See, I didn't know that.
Where Biden had a sore throat. That's what it was.
Okay.
In any event, obviously the political landscape now has changed. This whole election has changed. But at that point, if you look at what the markets did after that debate, where they were predicting very strongly that we would have a Trump presidency, you saw the U.S. dollar climb. You saw healthcare, financials, and energy start to move upward. So those sectors are going to be favored by Trump's policies.
Okay.
Whereas you have Kamala with a very socialistic view, a liberal view. Are you kidding me?
Moving along.
My God. Anyway, she will probably favor more of the infrastructure and spending areas.
More socialist.
I think we'll see also a cooling of the U.S. dollar in that event. But am I going to predict? Am I going to bet on who's going to win this election? Not right now. I think it's too early, and it's interesting. We only have a couple months left, but I don't know. I think that's from an investing side of things. That would be my 411. Would be those sectors and the American dollar. But am I going to pivot my strategy? No. The answer is no.
Yeah. Perfect. Good. Well, I'm glad. I think we
What
covered.
do you think's going to happen, John?
Well, I think that this is where I'm going to surprise you, because I do have some. I always act like I don't know what's going on, but my interests are just simply very short in my attention span. I found it interesting because I actually tuned into when Trump was doing his interview with Elon, and I
got on.
I did. I actually did. And what I found very interesting is, and I kind of came into the office and I joked a little bit about, Trump represents every single male in that we have intention of what we want to say, and then there's what actually comes out of our mouth, and that's what gets us in trouble all the time.
So yeah, what do you think about the election, John?
Well, I've learned that anything that I say is likely to get me in trouble, so I won't say anything.
Good. Close it out.
Vote Trump.
No. Close it out.
I'm John Reyes, Wealth Advisor,
And I'm Jillian Seguin, Associate Wealth Advisor.
and we work at Reyes Group at
Why are we doing this again? Just say thank
I don't know.
you.
Thank
Thanks
you.
for tuning in.
Vote Trump.
Bye.
As a young man, heard the sky's the limit. First thing first, I'ma break through the ceiling. One life jam, but it feels infinite. One life damn, then I better go.
This information has been prepared by John Reyes, Wealth Advisor, and Jillian Seguin, Associate Wealth Advisor for IA Private Wealth Incorporated, and does not necessarily reflect the opinion of IA Private Wealth. The information contained in this video comes from sources we believe reliable, but we cannot guarantee its accuracy or reliability. The opinions expressed are based on an analysis and interpretation dating from the date of publication and are subject to change without notice. Furthermore, they do not constitute an offer or solicitation to buy or sell any of the securities mentioned. The information contained herein may not apply to all types of investors. The wealth advisors can open accounts only in the provinces in which they are registered. IA Private Wealth Incorporated is a member of the Canadian Investor Protection Fund and the Canadian Investment Regulatory Organization. IA Private Wealth is a trademark and business name under which IA Private Wealth Incorporated operates.